Working from home benefits companies, their employees, and these three stocks. The shift to remote work has boosted revenue and earnings per share growth for these three stocks. Airbnb. It continues delivering double-digit revenue growth figures. Alphabet. Google Cloud remains an important growth engine for the tech giant. Booking.com. Similar to Airbnb, Booking has maintained double-digit growth figures and is trading at a relatively cheap multiple. Let's dive in. Here are the three stocks still benefiting from the shift to remote work. Welcome to Timely Investment Research. During the COVID-19 pandemic, technology stocks received a huge boost as people around the world sheltered in place. Office workers had to purchase an array of electronics and software in order to manage their remote workforce. Consequently, to the disdain of certain CEOs and commercial real estate holders out there, remote work has become more of the norm. Fortunately, investors can actually benefit from the remote work trend. Let's examine three stocks that have seen their revenue and earnings increase as remote work adoption continues. Number 1. Airbnb. Founded in 2007 and headquartered in San Francisco, California, Airbnb represents one of the many faces of the new digital economy. The company primarily operates a platform that enables hosts to offer stays and experiences to guests worldwide. Through Airbnb's marketplace, hosts and guests connect online or through mobile devices to offer and book spaces. Booking Airbnbs rose into popularity due to consumers' desire to book vacation accommodation that felt more like being at home. The COVID-19 pandemic, of course, led to decreased travel. But as soon as borders reopened in 2021 and 2022, traveling spiked significantly. Moreover, as the pandemic came to an end, both travel and remote work became a norm. People traveling globally while working are likely to book short-term stays through Airbnb. The company has continued to deliver double-digit revenue while boosting earnings per share to new levels. Airbnb shares have risen more than 21% year to date and could rise even higher as remote work remains in the norm. Number 2. Alphabet. Alphabet requires little introduction at this point. The tech giant is not only the parent company of Google, but also YouTube and Google Cloud. Because the company has its hands in several technology verticals, it's been able to weather the macroeconomic environment better than other technology companies. Further, Alphabet's exposure to cloud computing has definitely boosted revenue since the COVID-19 pandemic proliferated around the globe in 2020. In its fourth quarter 2023 earnings report, cloud continued to be the company's growth engine, growing 26% on a year-over-year. As remote workers increase, so has the use of Google Cloud products. Gemini, Google's AI platform, will also be leveraging Google Cloud. Alphabet shares are trading flat in 2024, but at only 20.7x forward earnings, Alphabet looks like a buy. Number 3. Booking.com. Booking Holdings Incorporated is the world's leading online travel agency, operating Booking.com, Priceline.com, Kayak.com, and Agoda.com. During the pandemic, Booking.com had been severely impacted as many countries imposed lockdowns and travel restrictions. This ultimately resulted in a sharp decline in global travel demand and revenue. However, the company has shown signs of recovery since these restrictions have been lifted worldwide. In 2021 and 2022, respectively, revenue growth was in the high double digits at 61% and 56% year over year. Furthermore, in 2023, the company delivered another year of solid double-digit growth. Similar to Airbnb, Booking.com is benefiting from a shift to remote work, prompting many to travel more than previously. The stock has increased 46% over the past 12 months and, with a relatively cheap multiple, could rise even higher. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.